Uh, let's look at the debt. The favorite question for all television anchors when we meet real estate companies. You've consciously reduced your debt. Net debt to equity is less than 1 now.
Less than 0.5 now.
Yeah, I mean less than half now. And if this current run rate continues, FY24 technically you will be net debt free.
Yeah, means I think if we were wish to, we could become a net cash company over the next 2.5 years. So not FY24. FY24 will literally end in 4 months, so we will not become net cash in that period. But yes, in a short duration thereafter. We are very conscious of being very conservative on our leverage. We think the opportunity is very long, but there can always be black swan events. There can be other things which can go wrong for a short period of time. And as an organization, we want to be growing and scaling up in the most risk-free or lowest risk manner, and in that having very low leverage is very, very important for us. So we are very conscious that we want to continuously and always keep debt below 0.5 times equity and below 1x of operating cash flow. And in the good part of the cycle, we want to be even lower than that, so that in a tough part of the cycle, if we have to come up, we'll come up to that level.
But if you're confident that this cycle is a long cycle, you have a brand, and even if you, let's say, keep your debt to equity ratio to 2 or 2.5, it's fairly acceptable, but that will also give you a lot of growth runway.
It could, but we are of the view that we can, keeping our balance sheet very, very conservative, we can grow at 20, our pre-sales and top line at 20% and deliver 20% ROE. I think if our internal cash flow generations are that strong that we can sustain our 20% growth, then there is no reason for us to add on risk.
In terms of the concentration, what builders have, you are a Bombay-based real estate company. Prestige is a Bangalore-based real estate company. DLF is a Delhi-based real estate company. Is that the differentiating factor now for all real estate companies that grow in the areas where you have the core market?
I think everybody needs a core market. There are probably 3, 4, 5 players in the country right now who are of scale, have a brand where consumers are aware of. Some brands are much more valued and sought after, others may not be as much, but broadly there are a very handful of real estate companies in our sector, like in any large sector, where the brands are strong enough to scale up. And everybody has a core market, a home market. Ours is Mumbai. And these brands, some of these brands will travel well, as we saw with our launch in Bangalore, where we were sold out in less than 72 hours of the first launch that we did. Others will travel less well. So I think the operating models of different companies will differ based on the depth of their management capability and the strength of their brand.
Now you guided for pre-sales, and 2 quarters, you've achieved 48% of that. The second half, this time we've had Diwali Dussehra. The second half traditionally is a better half. So can I safely assume that if I put data point, you're on course not only to meet your guidance, but to beat your guidance?
I would say is that, the 20% growth that we promised last year, we of course promised it taking into account, what we felt the year was going to be like, and it looks like the year is on track to meet that guidance.
Is there a volume growth advantage which you have in that 20%?
Yes, of course. Like I said, we like to keep price growth modest, not low and not very high. We like to keep price growth a little below wage growth. So this year, wage growth in the country is going to be around 9%. We are targeting price growth of between 6 to 8%. And therefore, the rest of it is all going to be volume. So we are growing our volumes by about 13-14% this year, partly from existing locations and partly from new locations.
This is 2023. Third quarter of FY24. Hypothetically, if you're having the same conversation at the same place, apart from more Lodha hours, what else do you think we are likely to be discussing in terms of size, in terms of where you think you would have reached? 5 years.
I think, scaling up and sizing is one part of the journey. We, of course, are very committed to, continuing to scale up in a predictable manner, in a low risk and predictable manner, which I think differentiates our business from some of the others who may be in this industry. But I think beyond that, I think our commitment to being a purpose-led organization which gives back to society and makes a positive difference to society, not just in the jobs that we create or the great ecosystems that we have for people to live or work with, but also how we use our capabilities, how we use our intellect to make an impact on society beyond just the business that we do, is a very important part of what we exist for. And I think you will see that, some of the initiatives that we are taking will make a bigger impact on society in these next 5 years. So perhaps you'll spend a little bit more time discussing those.
Fantastic.